Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a proposed SAS coming out of the Auditing Standards Board with respect to external confirmations. Now, we all know that reliability of audit evidence increases when obtained from third parties, and so the AICPA is looking to make some changes in alignment with some of the changes made by the PCAOB to external confirmations. So this was actually proposed back in February of 2025, and it does give us a little bit of background from the PCAOB. So in September of 2023, the PCAOB replaced their extant AS 2310, which was formerly known as the confirmation process, with a new AS 2310, the auditor's use of confirmation. And so this is going to be, looking at what are the changes here and where should we have alignment with the PCAOB in the Auditing Standards Board's opinion for private entities. So probably one of the ones that you hear about the most when you think about this particular standard is that it's going to require the auditor to use external confirmation procedures for cash and cash equivalents held by third parties to respond to the risk and material misstatement for certain relevant assertions around significant classes of transactions, account balances, or disclosure. So again, in this scenario, really important that we look at the concept of relevant assertions. So it's not saying every cash account. It's saying where you have a cash account that has relevant assertions around significant classes of transactions, account balance, or disclosure, what we call CATA beads in AS, or when we look at AUC section 315. So from a risk assessment perspective, where do we have risk to which the confirmations will help reduce that risk? And so obviously cash plays a critical role in liquidity, solvency, and operational stability. And so confirmation procedures can assist with certain risks. And so they felt like that would be appropriate. In addition, they felt like it wasn't going to be a significant change in practice because lots of people are already confirming cash, right? Cash confirmations are not unheard of. So they are trying to make this more standardized and consistent across the profession. Now, obviously, in this scenario, you have to do a risk assessment. You have to determine if you have a relevant assertion using the concepts in AUC section 315. However, we recognize that you may not get a response, right? So it acknowledges that the auditor may be unable to perform external confirmation procedures in certain circumstances when either the confirmation is prohibited or more commonly that they just refuse to respond. Obviously, you can't be required to do something if you can't get a response. And so they would make that acknowledgement. Now, they do make a couple of changes around this concept of risk, and that risk, not materiality, is the driver of the confirmation process. So you can see here, the auditor should include in audit documentation the basis for any determination not to use external confirmation procedures for accounts receivable and cash in accordance with paragraph 20 and 21. So this is a documentation requirement. And it basically says if you're choosing not to confirm accounts receivable, you have to explain why. And materiality is not going to accept you from the documentation. Now, it does provide, it continues to provide an ability to say that you're not doing it because the account overall is immaterial quantitatively and qualitatively. So that was added as an explanation that you can't just think about it as being a immaterial balance, but that the transactions, et cetera, qualitatively also would indicate that would be appropriate. So this is something that has also caught others' attention in terms of the application of this particular proposal. So we're not saying that you have to confirm everything. It is risk-based. You just have to have an explanation of where you have relevant assertions. Now, it does recognize, and very importantly, that you could have an alternative procedure. And so for cash items, verifying the entity's cash account maintained in a financial institution by viewing the information directly on a secure website of the financial institution when access is provided by management. So this is important because this is a clarification that's being made about what is an external confirmation. And so if a person, an auditor, watches someone log into the bank account, that is not an external confirmation because you didn't get it directly from the bank. In this scenario, you were provided access by management. So we recognize that this is audit evidence. It's just not an external confirmation. So when you're looking at the requirements around risk, you have to recognize that minor difference as well. So how do we get there? Well, we do it through these definitions. So when we take a look here and we're trying to make some of the understanding here, they're a little bit more clear. So you can see some updated and new definitions. Confirmation request is a request from the auditor to a confirming party regarding information about one or more particular accounts, balances, transactions, or other items as a means of obtaining audit evidence about one or more financial statement assertions. And then again, the confirming party is a third party, whether an individual or organization to which the auditor sends a confirmation. An intermediary is not a confirming party. And you're going to see that they do talk about things like confirmation.com and others in here as well, which we're going to talk about as intermediaries. But I want to look at the term external confirmation procedure. That is a procedure that involves selecting one or more items to be confirmed, sending a confirmation request directly to a confirming party or otherwise directly accessing the information held by a confirming party and evaluating the information received and addressing non-responses. So you can see here, it has got to be directly with the confirming party. So that's why watching someone log in is not an external confirmation procedure, right? So an external confirmation procedure has to be directly with the confirming party. Now, when we talk about intermediaries, right, a lot of these confirmation.com are used, they're popular. Here you can see definitionally it's a party other than the auditor or the confirming party who facilitates direct electronic transmission of confirmation requests and external confirmation responses. And so we do get an understanding that these are popular. But they do provide us with this concept of risk. And so the auditor or the confirming party can engage another party as an intermediary. However, when determining whether to use an intermediary, the auditor should evaluate the implications of the reliability of the confirmation request and external confirmation responses, right? So it talks about making sure that we understand the intermediary's controls. They talk about potentially getting SOC reports here. So if you're not currently thinking about risk in that perspective, when you're doing your procedures, that's definitely something you want to consider. So again, it's not a very long proposal. You can definitely take a look at this on its website. If it is issued as final, it would not be effective earlier than for audits of financial statements for periods ending no earlier than December 15th of 2027. So we are going to get through quality management. So this year we've got our quality management standards that are going to be implemented by December of 2025. And then you have to do your first evaluation by December of 2026. So this would be in December 2027. So after we've gotten through this. Now, comments are due by June 30th of 2025. So in this scenario, you're going to have a little bit more time to provide feedback to the Auditing Standard Board. And I do encourage you to provide any examples or any understandings that you think need more clarification after reviewing the standard. All right, well, it's been my pleasure having you on today's blog, and I look forward to seeing you on a future blog. Have a great day, guys. Bye-bye.